It is February 1st, the Market Update Desk, powered by Mortgage One with your host, Scott Riley. Hey, the great thing is we are in February now. Did you know that now that we're in February, we won't have a month without baseball for 9 months? So I know the Lions lost, but moving right on to baseball because that's near and dear to my heart. So we're in baseball season, pitchers and catchers report. It's a great thing. Today is kind of the pause in the market, getting ready tomorrow for that all-important BLS jobs report. Want to go over what happened yesterday with ADP, aftermarket, things going on with other reports. So the Fed yesterday did as expected, kept rates the same, and they believe they have reached their quote peak fund rate. So that's good news. Their statement had a few changes. They acknowledged that the better than expected GDP reports saying that economic activity has been expanding at a solid pace, a change from saying growth has slowed from Q3 in December statement. They also said that the risks to achieving its employment and inflation goals moving into better balance, but they don't expect rate cuts until they have more confidence that inflation is moving substantially towards 2%. Now, Chair Powell did acknowledge in his press conference that the 6 month of inflation data is exactly where they want to see it, which was 1.85%. So they want to see more data. Now, this is very interesting because the 6 month pace, as I said, was 1.85%. The 9 month pace was at 2.08%. So we're there. Now he came out and it's like they're trying to game the market a little bit because as we go forward in 2024, it's an election year. If they're talking about 3 to 5 rate cuts, there are 8 Fed meetings during the year. We just went through one of them. They're trying to lay the groundwork to the market of no decrease in the Fed funds rate in the March meeting. That leaves 6 left. And if you look at it, there's 3 of those meetings that lead up to the election and one after the election. So are we going to see bigger than expected rate drops during a couple of those meetings? There's some concern that, is this going to have a political influence? Why are they hesitating? We're seeing the 6 and the 9 month run rates exactly where they want to be. So there's some things happening behind the scenes with Gaiman, I think, the market. So we're just going to have to see. Now, after his statement, things did get choppy after Powell spoke and said that based on the meeting today, it doesn't look likely that the committee will reach a level of confidence by the March 20 meeting, kind of what we talked about. Bonds started to give back much of what their gain was that day, but they were able to claw those back and then to the positive by the end of yesterday. Now, Powell did not say. What was interesting is he actually did. I watched the conference and he didn't really get into depth on this. Did not say how much on the balance sheet they were going to start to look at doing runoff, and they won't start to seriously discuss this until the March 20 meeting. We were looking for some more clarity on the balance sheet and runoff and quantitative tightening coming to an end. So there's a couple big things that weren't talked about. Initial jobless claims came in actually worse than expected. So initial jobless claims were increased by 9,000 to 224,000. Now, with the holiday and adjustments behind us, this figure has been rising for the last 2 weeks, by the way. Continuing claims also rose 70,000, that's a big number, to 1.898 million. It's a big rise and another sign that once you're laid off, it's becoming harder and harder to get a secured long-term job. Productivity and unit labor costs. Productivity in Q4 rose 3.2%, which was much stronger than the 2.5% that was expected by the street. As a result, workers are being more productive, which led to lower labor costs by 0.5%, which is helping wage inflation. And the bond market did really, really like this, by the way. Now, one unique report came out yesterday. The Challenger Jobs Cut Survey showed that actual layoffs were at the highest level in a year, and announced layoffs were the highest level since 2009. And actually, I've got a CNBC article that went into this in a little more depth. Companies announced the highest level of job cuts in January since early 23. A potential trouble spot for labor markets that will be in sharp focus this year, according to the report from Challenger Gray and Christmas, the Challenger Job Cuts report. The job outplacement firm said that planned layoffs totaled 82,307 jobs for the month. That's a jump of 136% from the December report, and it's still down 20% from a year over year. Waves, a couple of the statements that he gave, waves of layoff announcement at U.S. companies in January after a quiet fourth quarter, said Andrew Challenger, senior vice president at the firm. These cuts were driven by broader economic trends and strategic shift towards increased automation and AI adaptation within industries. So this Challenger Job Cuts report is a big thing, and that's what's driving, by the way, as we get into the technical analysis, the 10-year bond all the way to 3.9 after today's news between job cuts and the jobless numbers, and is now starting to break beneath the important level of 3.92. This all leads up to tomorrow's BLS jobs report. We're a little bit concerned on this jobs report because we talked about it yesterday. Last January, the report came out about 400 or 500,000 more than expected because of population controls, seasonal adjustments, and moving some benchmarks. Basically, they find jobs that they didn't count throughout the year and drop them in January. This could really stunt some things tomorrow. And because of this cautious tone from Chairman Powell on rate cuts, we have to ask the question, did they get a sneak peek at tomorrow's BLS jobs report? And are they trying to stunt that in the market to help the market understand there's going to be headwind tomorrow? So we're very, very concerned on what this report's going to read. Now, going forward, we think we've got real positive information coming between inflation, jobs, wage inflation. Kind of a longer update today. Now, tomorrow, we're going to get all over it. Senior analyst Gibson does have a doctor appointment in the morning, so he's going to be up really early, crunching numbers. And then after his vet appointment, he's going to be putting together the script for the BLS jobs market update. Hope you enjoyed this. Thanks so much. Scott Riley, 616-293-2189. Have a great day.